So Citigroup has had a pretty bad end of 2011 and a not so great start to 2012, but they've just come in with first quarter results that seem to get them back on something of a path to something, nothing great or imminent.
But that is pretty much how to describe it, I think. Yeah, Citigroup, if you're thinking about investing in it, is a very good, exceptionally long-term story.
That's what I was trying to say.
There you go. But the issue with Citi, obviously the fourth quarter end of last year was pretty bad for everyone, but Citi looked particularly dismal. Its investment banking even lost money. And then they failed the stress test. They hate being told that they failed the stress test, but they were told they couldn't return capital to shareholders. But they're still, they're kind of okay with that.
We're going to parse the words a little bit.
But no, they've actually made 3 times the return on equity this quarter they did last quarter. That's a
whopping
6.5%. Now, actually, if you strip out, if you just forget about the bad things like all these dodgy assets they've still got in Citi Holdings, forget about that. Forget about the marks they took on their accounting gains that no one likes having.
Have you been hired by Citigroup PR?
Absolutely. They pay me $1 a year, just like they used to pay Vic Company. It's great. But if you strip that out, then even then, what they earned just on Citicorp, the main business, would have been just an 11 or 12% return. So it's not brilliant by any stretch of the imagination.
No, but it does put them pretty much on where Wells Fargo was, where JP Morgan was.
Yeah,
I mean we looked at those on Fridays.
One of the things that also stood out for me is that just looking at these earnings was how much of it was due to this enthusiasm during the first quarter, just the fact that Europe calmed down. And now what we're starting to see again is people are starting to get concerned about Europe, particularly Spain. And so that's my question, particularly on Citigroup, like how much of this is fueled by credit markets coming back and snapping back pretty sharply because everybody was freaked out so much last year, so they're getting this boost. So I guess my question is like how sustainable?
Well, they're clearly
that's the big thing. If you look at fixed income trading, it went up. I think if you strip out these damn accounting gains again, they went up about 300% from the fourth quarter. So that's a pretty big jump to
and you really couldn't get sort of a more stark comparison, I guess, between Citigroup, which is the global bank, versus Wells Fargo, which is so focused on the U.S. market and the housing and where that recovered. But I mean, so how is that? I mean, how is that playing out in terms of? I mean, you said you guys both said that Wells Fargo actually deserves a premium to J.P. Morgan. It must deserve a whopping premium to Citigroup at this stage.
Well, they got a nice whopping premium to Citigroup at the moment. So, yeah, I mean, Wells Fargo has somehow managed to do a very good job despite buying one of the dodgier banks of the crisis, Wachovia, with a lot of bad mortgages on there. It does what it says on the tin pretty much in banking, right? I mean, we do wonder sometimes how they actually get the numbers to work so well, given their mortgage exposure. But I mean, hang on, Agnes, you've thought about this for a while, haven't you?
And again, I really think we're starting to see this kind of contrast maybe in models. I mean, the thing about Wells Fargo that strikes me too is the fact that it is so U.S. based. So it is not getting slammed by,
It's U.S. based. It doesn't have a big investment banking operation, which JP Morgan and Citi both do.
Exactly. And it doesn't have these, like, I mean, yes, it has some of the legacy stuff on the mortgage side, but it's not dealing with the same kind of things that like some of these massive universal banks
It's big enough to get the diversification effect, as they like to call it, of owning a fair number of businesses in one geography. But it's not so big that it has to worry about, well, okay, we're not doing so well in America, but hopefully we're doing well in Asia or in investment banking in Latin America. So there's a degree of management focus on core banking in the U.S.
It's a little bit simpler. They don't have a huge derivative.
They're a pure, boring sort of lending business, right? Which maybe for the next couple of years might be the way to go.
Exactly.
All right, well, we'll leave it there. We'll be back with more bank results and more breaking views tomorrow.